Hi guys, market outlook today is Saturday. I hope you have watched already our video, Jim Rogers video. Please know it's up here. Check out the link. I'm going to put it up here as well. Jim Rogers, which is with his valuable insights, I hope at least, and obviously the investing wisdom for the future for whatever you want to achieve in financial markets. Back to actual trading and this coming week's outlook. What's going on here in the following week? We saw some correction, a beginning of a correction in equity markets. We shall look into that one. We got an important interest rate decision out of Kiwi Island, New Zealand as well. And we have PCE data from the US, which we'll look into as well. So stay tuned for the actual video and check out what might go in the couple of trading days ahead. This current week, which is ending soon, had ended basically here in terms of news releases with a positive data. PMI data, Purchasing Manager Index out of the US, was stronger, way stronger than expected. And that was not our expectation beforehand. We said European data may be better, American data, tariff rise and such might weaken, which was not the case. Is the US dollar now gearing up some momentum? Not quite so far. That's at least the current situation. And we want to tell you why we see the market sentiment kind of changing direction at the moment. First of all, we shall look into the Japanese yen, a critical currency. Dollar and Japanese yen currency pair has started to weaken again. And that's kind of against the trend which we've examined previously. We were on the long side of things and we kind of took the market all the way to the upside here. And then basically 2 weeks ago, the market Monday, Tuesday really went higher, stopped kind of rising at this level. And then this week, we sold the market and a nice off we went to the downside here, and we closed some part of the trade. For the ones of you keen on getting more insights, tune in fxstrategies.asia on our website, where you get latest updates on a daily basis in our morning calls with our obvious chat group, where we kind of talk trades in and out and check out potential market behavior. Nevertheless, back to this currency pair, we get debt in Japan rising, still dramatically high. Inflation has started to trigger higher levels, and that now would cause the Bank of Japan to counteract. Now, they can't really do this because the debt levels are so high. Any kind of fraction of a percentage point would already cost the government a fortune, and that's exactly the tricky reason. Plus, longer term data, economic data in a way, the population is getting older and older, and that might turn into something which is going to be interesting to observe in terms of the future outlook. Dollar Japanese yen currency pair, we also examined this in our recent market outlook. Check it under the link above here, where the dollar JPY is currently about to trigger some lows, and we remain in our short expectation here in this market. Any higher levels can be seen. Any break, and that's again this little vacuum part here, any kind of break of this vacuum area, which means we haven't traded in a long while in this range, might trigger quite some sell-off motivation, which actually, now we are not at the end here, which potentially moves all the way towards even lower areas. And even then, and that's the exact, this makes actually sense here, that's the exact zone. This area we have not seen, and this area has not been tested basically for quite a while here. The resistance, now support, is in this range, but the downside momentum is currently kind of what causes the market to maybe be on alert. So stay focused on and tuned on this one. Might weaken further. We got into different trading opportunities, as well as we see also the pound against the Japanese yen basically ready to potentially weaken further. Trend line wise, we see a bit of a break here. Pin bar candlestick, sideways price pattern, 50 moving average. This is all what could give this market a bit of a push to lower price levels. Plus, the euro against the Japanese yen had started already. Here, my trading buddy Arnis, check out our website. He also talked about this, and this is his favorite trade here. We battle sometimes who had the better trades among us. In any case, that's the downside here we expect. in the euro against the Japanese yen. And next one up, what's up in regards to the news events? We have the Royal Bank of New Zealand, and they are going to kind of be expected with an interest rate decision cutting rates by 25 basis points. Check it out on the electronic calendar here. This is coming up this week here, this following week, basically starting on Wednesday. RBNZ, 3.25 percentage points. That's what the rate cut is going to kind of potentially mean here in markets, because the rate cut, if expected, as expected, might actually not move the momentum quite dramatically. Instead, it could be something worth a consideration where, if you're looking into it, you could kind of get yourself into entry opportunities and buying the market at cheaper levels. This now doesn't mean that the market falls all the way, but maybe a bit of a correction to then see a push higher, maybe towards the 50 moving average. So that sort of support zone, the upcoming one, could be the one which is causing the market some nice support. And check it out here, whether you trade the news event. If you're back in Europe, might be a bit of a tricky situation, because the news release kicks in at least early, 4 o'clock in the Central European time zone here. But that information might be worth a shot for you. CPI data coming out slightly earlier could be something which is important to see as well. In Australia, obviously the Central Bank of Australia, the Royal Bank of Australia, had cut interest rates by the predefined and pre-expected 25 basis points. Now, this is not really causing a harm to markets. Instead, CPI data might now be obviously kind of quite interesting to observe, because if so, there might be an impact here in this market as well. The upside potential, and let's escalate it to the upside here, is in full swing. Upside momentum all the way, maybe towards this resistance zone, to any potential resistance zone, which, by the way, is near the 50 moving average as well. If you're looking at the falling trend, could be worth a consideration for you. Upside potential, US dollar weakness might be ongoing if there is some motivation here. 1 second as well. Hey, how about this story in regards to atomic power plants? Donald Trump, obviously an advocate for everything we have under earth to be taken out. Gold, silver, but in terms of energies, he's a supporter of gold, uranium. If we are looking at the uranium market here, we can see this news alone in the couple of recent trading hours, basically on Friday, caused the uranium ETF. And by the way, this one is not overly bad in terms of some dividend pays, right? So if you're focusing on that one, take a look into that 2.8% roughly here is what the ETF pays. Any break of the high point, any break of this technical resistance zone at the 32 area, support on the left, resistance here, and resistance. If this one breaks, I see an explosion, just driven by the demand factor basically in this uranium market, as obviously kind of fundamental stories in regards to Donald Trump's information is what's a driving factor potentially behind such move. Next one up, the oil market, looking actually at the moment still slightly positive, but medium term, this is going to be interesting, because the market's motivation here and the break of the trend line would indicate a push to higher price levels. However, medium term, this looks like a strong resistance in the making. And if this low area here currently is going to break, downside might intensify. We shall see whether the market is moving even lower, but it looks like at the moment this is going to be the case at some point soon. That's for the oil market. Is the demand story in regards to the economy kind of also telling us something potentially, because the PCE price deflator in the US, if it's going to come out at higher levels, it could harm, as we said, the index market, and with that obviously the S&P 500 and the Nasdaq. So when checking out the Nasdaq, and then last but not least the crypto space, the stock market on Friday started to kind of get a bit of a dent here, right? Friday's weaker price momentum before market opening. At the moment, it looks like any correction is in the making. We stated this basically. So for the ones of you having watched this previous video here last week, we said any correction may be happening. Currently, it might be that the Nasdaq, which is on the screen right now, might move towards the 20,500 level. Any correction there might be used as an entry. Buy the dip could be the new strategy to apply here. Any break lower might obviously then call for much more weakness in not only the Nasdaq, but also the S&P, which is this one here. The S&P is already trending kind of rather closer to breaking slightly lower. However, soft data kind of in a way weakening here. PMI data, as we just examined from this current week, basically is not giving us a room to worry. Economics data, strong, solid data from the US has been making the round, but on the horizon, it's getting a bit grim here. And hence, obviously, the downside might still be around the corner, but in the distant future, 2-3 months ahead. That's at least what I've heard when listening to my glass bowl earlier this morning. The German side obviously is well correcting, so we have capitalized slightly on this slide, little short trade, looking not overly bad here, but instead the market tagged this support here, and that's exactly what I said. Is the DAX giving us a preview for US indices? Yeah, potentially, because the recent breakout, the recent all-time high here from end of last year acted as a strong support level. And that's exactly, if we look at it from this perspective, this is currently what this recent high point here is the support level. So that said, I might say we are far off a bigger correction. I still believe we see a bigger correction in markets, but maybe not for now, as the market sentiment remains kind of quite interesting at the moment. The dollar against the Canadian dollar, there might be a bit of a reflection into what we've said with the dollar index poised for further lows. Guys, by the way, follow up as well with my Trading View channel, the link under this video. I'll post trading updates similarly to Twitter, so follow up on X. We still have our recent updates there as well. Now, this market looks kind of quite weakening as the recent support zone about to break maybe further. Resistance on the left, support on the right. This support has been broken, so welcome. Here we go. Downside motivation being expected. News-wise, again, this upcoming week we have the RBNZ as said, CPI from Australia, from the US, not too much, but the shocker will be on Friday with potentially adding extra volatility with the PCE price index. Guys, thanks for tuning in. Have a good one. Have a good day trading, and a happy fresh start of the week, basically on a Monday. See you then. Take care.